Welcome to another live episode. I'm going to be teaching you some bookkeeping stuff, specifically all about real estate investors and how to do their bookkeeping. Yesterday, I did some bookkeeping fundamentals. No, 2 days ago, I went live and talked about some debits and credits, some bookkeeping fundamentals, very generally debits and credits. So today, I'm going to very specifically talk about debits and credits, journal entries for real estate investors. And then I'm going to go live for about maybe an hour, depending on how many questions you ask. So go ahead and drop some questions in the chat. I'm going to go through my notes for like 10 minutes. And then I'm going to get to everybody's questions in the chat. So if you have questions about bookkeeping, QuickBooks, sales, marketing, cleanup projects, customer service, client agreements, onboarding clients, whatever your questions are, go ahead and drop them in the chat and I will do my best to answer everybody's questions. I'm going live every Tuesday, Wednesday, Thursday, Friday at 10 a.m. I also upload these on my podcast. It's the same name, Bookkeeping Expert, Zach Pasquarello. Find me on Apple or Spotify if you prefer podcast. And I'm also going live on YouTube every day. So feel free to tune in every morning at 10 a.m. I started my bookkeeping business 5 years ago. And now I have 75 clients, 75 bookkeeping clients. I did have 80, but I've lost a few clients. I'm not super focused on getting new clients anymore. I'm just focused on continuing my bookkeeping business. So I've learned a lot of lessons over the past 5 years. And so my goal with this YouTube channel is really kind of fun for me. I just genuinely enjoy talking about this stuff, but also I want to teach you everything that I've learned so that hopefully you can fast track to success and avoid making the same mistakes that I made. So I do a lot of bookkeeping for real estate investors. I also have a private money lending business and an investment fund. So I do a lot of real estate lending. So I have a ton of real estate experience on the bookkeeping side and as a private money lender. So with that, I'm just going to jump right into it. And I'm going to share my screen and I'm going to do some journal entries. So this is not exciting stuff, but it is very important. So if you have any aspirations of working with real estate investors, this is going to be very helpful. So hopefully you can see my screen. If you can see me, if you can hear me, if you can see my screen, let me know. So I'm going to walk you through the entire process of purchasing an investment property, specifically a flip. This is going to be for purchasing a flip properties. Okay, so hopefully you can see my screen here. I have 4 boxes. So the very first thing that you're going to do is earnest money deposit. So you're going to do an earnest money deposit. So basically that's going to be probably a check coming out of your bank account. So for simple purposes, let's call it $5,000. So EMD is an asset account. It's an escrow account, earnest money deposit. And the checking account is also an asset account. So we're going to credit the checking account, $5,000, decrease the checking account, spend $5,000, and put it into earnest money deposit. That typically happens 30 to 60 days before you purchase a property. It's your earnest money deposit. It's your down payment so that the broker will work with you. Now we actually purchase the property. So there's a few things to look into. Also, you want to make sure that you class track. So for, let's just call it Main Street. Just to keep it simple, the property here, we'll call it Main Street. So you want to make sure you're class tracking all of your transactions in QuickBooks because this earnest money deposit, you're going to have a ton of EMD deposits. And so you want to make sure you're able to differentiate between the multiple $5,000 EMD deposits. Okay, so now you actually purchase the property. Okay, so let's talk about it here. We have the chart of accounts. So we're going to call it 201 house cost. Okay, that's the purchase price of the house, 201 house cost. And then so we're going to get all these numbers straight from the HUD. And I've done this so many times, I'm just going to pull numbers randomly out of my head. So let's keep it simple. Let's assume that it is a $100,000 purchase for the property. And so we're going to class track this. So the property, the class in QuickBooks is Main Street. And so we're going to debit 201 house cost for the purchase of this property. And the reason why I generally label the chart of accounts as 201 house cost is because we're doing a lot of flips. And so it's not realistic, it's not sustainable to put all of the individual address names on the balance sheet in the chart of accounts. So I just generally have 201 house cost. And then if I want to figure out how much I have in each property, how much I have on the basis of each property, I can go to the balance sheet and I can look at the balance sheet filtered by class. And so I can just look at the balance sheet for this property on Main Street and I can see, okay, we purchased it for $100,000. I'm going to go over the chart of accounts real quick. So we have 201 house cost, 202 rehab, 203 holding, 204 finance, and then we have 301 COGS, 302 COGS rehab, 303 COGS holding, 304 COGS finance, 305 COGS closing cost, and then 301 COGS house cost. Okay. Here's the main chart of accounts that we're going to use. 201, 202, 203, 204, and then all the COGS. So these are inventory. This is a current asset because we're flipping these properties. So whenever we go to Home Depot, whenever we pay for insurance, utilities, property taxes, interest payments, loan extension fees, appraisal fees, those do not get put onto the P&L. The profit and loss, those are not expensed in real time. Instead, those get put on the balance sheet as inventory under one of these four categories. Okay, so let's go back to purchasing the house. So 201 house cost, typically there's going to be some property taxes paid up front. So whenever we buy a property, typically, sometimes potentially, let's just call it $500. And this will be a holding cost because this will be taxes paid at closing when we purchase the property. So all in, we purchased this property for $100,500. And then we have EMD. So here we're going to credit the EMD for $5,000 because remember, we already paid the $5,000. So there we have a $5,000 EMD. And then we just have a few more things. We just have the loan and potentially cash to close. So let's look to see what that looks like. Let me just add a comma because I need to be able to see. Okay. So here we have debits for $100,000 and $500, credits for $5,000. Now let's just say you got a real estate loan. So I'm just going to generally call it real estate loan. And this is how I do it in my books too. So I don't have an individual chart of account for every single loan. Instead, I just have real estate loan. And then we'll just kind of class track that again as Main Street. And let's just say the real estate loan is for $90,000. So now we have cash to close. So now we need to come out of pocket for whatever this difference is. So it'll be $100,500 minus $95,000, which should be $5,500. So these debits and credits should equal. We have 100,500, 100,500. This is a very simple example. Sometimes there's more stuff involved, but this is a very simple example. And basically, whenever one of my clients purchases a property, I just look at the HUD. I just do a debit and a credit for every single number that shows up on the HUD. So if you have more numbers, just add it to the journal entry. Super, super simple. But every single time you're going to have some sort of house cost, some sort of holding cost, some sort of EMD, typically, usually a loan, and then cash to close. If there was no loan, then the cash to close would just be $95,500. That does happen sometimes. Okay, so now we have the house cost. Now let's just say, for example, in this example, we ended up spending, I don't know, $10,000 on rehab. And then we ended up spending an additional $5,000 on rehab throughout the entire process. Okay, so now we go to sell the property. We're almost done here. Stick with me. If anybody's just joining, if anybody has any questions, feel free to let me know in the chat. If you have any questions, I'd be happy to answer your questions. I'm almost done with this journal entry on real estate, how to do bookkeeping for real estate investors. This is a very basic example. So if anybody has a little bit more experience and you have maybe a more advanced question, feel free to ask me. If anybody's super confused, feel free to ask me clarifying questions. Or if you have questions about literally anything else related to bookkeeping, let me know, or real estate. I'd be happy to answer. Okay, last journal entry here. Now we're selling the property. So now we have flipping income. And once again, this all just comes straight from the HUD. So before we do flipping income, we have to move everything out of inventory into WIP. So here is where we have all of these. So let's take all of these. So we have the house cost. So remember, we debited the house cost. And so now we need to credit the house cost to move it off of the balance sheet. And then rehab, $10,000. Holding cost, $500. Finance cost, $5,000. Hopefully I'm doing my math right. Let me know if I'm not. Hopefully I am. Let me just format these cells real quick so that I can see the commas. Almost done. I'm telling you, real estate investors have complicated books, but the cool thing is there's a ton of real estate investors. There's a lot of regular people who have full-time jobs who are also real estate investors who make a lot of money and don't have time to do their bookkeeping. So it's very good. If you can do bookkeeping for real estate investors, I definitely recommend being able to do it. Okay, let's just check to make sure that our debits and credits equal here on 115,000. Okay, we're good. So now we just do the same thing. So we're crediting the WIP account, and now we need to debit the COGS account. So we're just going to take all of these and we're just going to move them right here. So right now our journal entry is equal 0, 0. No cash has been exchanged. It's just a balance sheet. Think of it like an adjusting journal entry to move this property off the balance sheet and now onto the P&L. So now we have all these COGS. Now let's just go straight to the HUD. So now let's look at flipping income, top line. How much did you get paid for this property? Let's call it, I don't know, 150,000. And then sometimes we get reimbursed for holding costs. So sometimes you might have overpaid in property taxes. So let's just say you got reimbursed, I don't know, $200 in holding costs. And then we have a few more finance costs. Maybe whenever you're paying off your loan, maybe you are paying off, this COGS holding cost. Yeah, so we got reimbursed. So it's a credit to the holding cost under COGS. It's a credit because we got reimbursed. And so now we're going to go down to the expenses at closing. So every time you pay off your mortgage, you're typically going to have additional interest owed at closing for per diem interest. For example, typically you will be all paid up on your interest through September 30th. But then if you sold your property October 9th, you're going to owe per diem interest from October 1st to October 9th. So let's just call it $150 in per diem interest due at closing. So we're going to debit COGS finance for $150. And then let's just say closing costs, just to keep it super simple, maybe commissions paid to your realtor, transfer title tax. I don't know what it might be, but let's just call it $10,000. Just to keep it super, super simple, $10,000 closing cost. And then we have to get rid of the loan. We can't forget about this real estate loan. So now we're going to debit the real estate loan, and it's typically the exact same that it was whenever you purchased the property, because most flippers are only making interest only payments on their loan. So whenever a flipper gets a bridge loan to purchase a flip, typically they're only making interest payments. So whenever they sell their property, they still owe the entire $90,000 back at closing. Okay, so now we have the flip income, $150,000, reimbursed for property taxes paid, $200, additional interest paid, $150, closing cost, $10,000. Now, hopefully, cash to seller. Let's see if I did my numbers right. Let's see. So we're going to take 150 plus $200, and we're just going to subtract out all of the closing costs and paying off the loan. And let's see. So cash to seller, $50,050. And then so this will be how much money the seller receives in their bank account. So that's what it should look like. Let's see if I can just fix this just so I can make it look nice and pretty. And then we can look at it all in completion. And then of course, you're going to want to make sure that you class track all of the individual transactions in the final journal entry. This is what it should look like. We're getting rid of the balance sheet. We're getting rid of the property off the balance sheet, crediting all of this. We're debiting the corresponding COGS account. And then we literally, I made these numbers up for this example, but we're literally just taking the exact numbers from the HUD, flipping income, reimbursement for property taxes, and then all the closing costs, paying off the real estate loan, and then cash to seller. And then so I create this journal entry, and then I match this journal entry to the wire deposit that you receive from the title agent. So in this example, there should be a $5,500 wire that you match this journal entry to going out when you purchase the property, and then you want to match this journal entry to the $50,050 wire deposit that you get when you sell the property. So that is pretty much how I account for earnest money deposit, purchase. This is how I set up my chart of accounts, and this is the journal entry that I do whenever we sell the property. So I'm going to now go back to the questions in the chat, and if anybody else is just now joining, if anybody has any questions about how I did that or why I did that, let me know. I'd be happy to answer your questions. Before I get to the questions, I do just want to say that this video is sponsored by my investment fund, Zip Capital, and I'm trying to raise money for real estate loans. So perfect timing. I'm offering 8% up to 12% fixed returns to my investors. So if you invest into my fund, I'll pay you 8 to 12%, and then I'll use your money to lend to local real estate investors. Okay, let's jump right into it. Let's check out the questions. But before I do that, let me just take a quick 5-second coffee break. Okay, let's see. Julie Trotta. I have a question about foreclosure. Is it just a journal entry that removes everything of foreclosure? So I guess that's a really good question, Julie. I'll be honest with you. I have never had to account for a foreclosure. So full transparency, I don't know what that would look like on the books. Just going to be honest with you. I don't know. So I'm so sorry, Julie, but I don't know the answer to that. I would probably look to see. I always rely on the document. So first of all, I guess you're not going to get any cash if you get foreclosed on. So I would look for some sort of documents to see if there's a HUD statement, because you have to transfer ownership of the property. So I don't know. Is there a HUD statement? I don't know. I honestly don't know that answer, but yeah, I'm sorry. I don't know. Sun Bay Bookkeeping. Good morning, Zach. I really appreciate your videos. You're welcome. Peace for all. Yes. Thank you so much. Din. Hi, Zach. Congrats on thinking of the decision of hiring employees for Harrisburg Bookkeeping. Thank you, Din. Marion McNaughton. Hi, Zach. Loved the debits and credits and looking forward to more info. Let's see. Jennifer Solis. Cash to close, same as checking or different account? Yes, cash to close. That's just the bank account, checking account. That's the same thing. Is cash to close? Yep. Iris. Hey, Zach. You were so appreciated for all your videos. Question: what is an estimate of a monthly bookkeeping fee for real estate investors? Thanks, Iris. It totally depends. Seriously. I say this all the time, but it totally depends on the size and complexity of the business. You're going to have some real estate investors who literally just have 2 or 3 properties. And then you're going to have some real estate investors who have 20 to 30 properties. I have had much success quoting real estate investors $4 per transaction if they want class tracking. I have a minimum of $300. I've got one client who pays me $2,600. So there's a very big range. Well, actually, somebody, I wanted to tell you this. Somebody just sent me a Facebook message and they said, how much does it cost for bookkeeping? And I know you all asked me, what do you say? What do you say? How do I respond to that? I don't know what to say. Here's what I said. I said, my bookkeeping fees start at $300 and then could go up depending on the complexity of your business. And I thought that was a really simple, straightforward answer. I'm going to start using that in the future. It's super easy. It's super simple. My bookkeeping price, my bookkeeping fee starts at $300 and then goes up depending on the size and complexity of your business. So I thought I would share that with you. I really like that answer. Charles, while the property is being renovated for resale, do all purchases for improvement get capitalized into the inventory on the balance sheet? Yes. While the property is being renovated, if you're flipping a property, yes, everything gets put into that WIP account, which some real estate investors get frustrated because if they hold the property through the new year, then all that money they spent in October, November, December for general contractors and supplies and insurance and finance cost and holding cost, none of that reduces their taxable income. So some real estate investors get frustrated, but that is technically the correct way to do it. Great overview. I'd love to work with real estate professionals. It's a really great place to be. I love working with real estate investors. Jennifer, wouldn't COGS be a P&L account? Yes, absolutely. Cost of goods sold is a P&L account. Julie Trotta, my client said he didn't get anything for the foreclosure. Julie Trotta. So I guess you would just wipe it off the books. I'm not sure because you would wipe the loan off the books, but I don't know what the corresponding, I don't know what that would look like. So it probably all depends on how much the loan was, how much he had on his balance sheet for it. Did he have inventory, WIP? Did he have rehab cost? A lot of it depends on his specific situation and how much he had on it. So unfortunately, I don't know. Natasha, good morning, Zach. I currently work in accounting, looking to start my bookkeeping business. Your videos are definitely helping me. Thank you for being here. Absolutely. Happy to be here, Natasha. If anybody else has specific questions, everybody, I'm making these videos for you. So I want to know, what kind of questions do you have? And it doesn't actually have to be specific questions. You could just say, hey, can you talk a little bit more about this? Just let me know what you want me to talk about. Let me know what you're curious about. It doesn't have to be a specific question. You could just say, hey, fill me in, talk more about this. Brian, good morning, Zach. You use classes to separate properties, but why not projects? So I'm not a fan of projects because every single project has to be associated with a customer. So that gets a little bit complicated. I prefer to use class tracking for real estate investors. I don't like to use projects. Projects are great for home remodeling companies and general contractors because it can be easily associated with a customer. So that makes more sense for a remodeling company or a general contractor, but I don't think it makes sense. It also makes sense if you're collecting rent. If you're collecting rental income from a property, that makes sense to utilize project tracking, kind of like a property management company to track the rental income. Nyasia, hi Zach, hi everyone. I'm so glad you're live. Congratulations on all your achievements posted on the community tab. Hey, absolutely, Nyasia. Happy to be here. Happy to answer everybody's questions. Okay, so it doesn't look like there's any more questions. So I'm gonna hop off unless some other people start asking questions. Let's see, Charles, for prepaid insurance on the properties, that is for 1 year. Should I still be making the adjusting entry at month end to debit insurance expense and credit prepaid? Charles, it depends. Is this a rental property or is it a flip? If it's a flip property, you just want to put it all into holding cost. If it's a rental property, then yes, you're doing it right. You want to put it into prepaid expenses and then you want to debit the insurance cost every single month. Do you have any prospects that just want their books done for taxes and not monthly bookkeeping? No, I don't do that. I don't do that, Marty. No, to answer your question straight up, no, I don't do that because that defeats the whole purpose of having a bookkeeper. And I don't want to operate like that. I don't want to try to cram everybody's bookkeeping in at the end of the year. I don't like that idea. So no, I only offer monthly bookkeeping. Iris, I like the answer to inquiries. Thanks for the estimate fee. Brian, I have a meeting with a potential client and they wanted to talk about managing multiple companies. Would the pricing model be the same based off total transaction aggregated from all companies? Brian, that's a complicated question. A lot of it depends on how many companies they have. So first of all, I like to keep all companies in separate QBO accounts. So I don't like to have multiple companies in one QuickBooks account. So I do require all my clients to have multiple QuickBooks accounts for multiple companies. And so it all depends. Typically, people have a main company. So I will definitely charge their main company the true price. So if they have a main company, let's just say that for example purposes, I don't know what your client has, but let's say they have 200 transactions per month. So I'm going to charge them $600. And then let's say they have another company that's a little bit smaller and this one only has 100 transactions. So I'll charge them $300. Same system, $3 per transaction. So we've got 600, we got 300. And then let's say they have a brand new company or maybe a holding company that only has, I don't know, 20 transactions per month. So typically my minimum is $300 per month. But because they're already paying 600, they're already paying 300, I might cut them a break. Probably 150 would be the absolute lowest that I would go. So I'll say I'll do it, but 150 is the absolute lowest. So 600, 300, 150 in that example. Jessica, when you got started, where did you get sample chart of accounts for the various industries? So Jessica, most of the time when you take on a new client, they will already have QuickBooks set up. So typically I just work off of everybody's pre-existing chart of accounts. And so as you get more clients, as you get invited to more QuickBooks accounts, as you get more experience, you're just going to learn what kind of chart of accounts people are using. So I really wouldn't worry too much about the chart of accounts. Also, QuickBooks has kind of like an example list. If you go to the chart of accounts in QuickBooks, go to create a new chart of account, QuickBooks has a long list of basically example recommendation chart of accounts inside of QuickBooks. So I don't have a template for chart of accounts, for a standard template for chart of accounts for all my clients. I typically just use whatever chart of accounts they were currently using, unless they're a real estate investor. And then I do use my custom 201, 202, 301, 302. That just seems to make the most sense. Charles, it's a flip. So yes. So if it's a flip, then you want to put everything into the WIP account and you don't want to do the prepaid expense. You want to hold that as a holding cost until they sell the property. And then all the income, all the expenses will be recognized at the current as soon as they sell the property. Real quick coffee break. And I hurt my neck. If you guys can't tell, I like can't move my neck and it hurts so bad. But that's one of the bad things. I didn't even hurt my neck working out. I think I just hurt my neck sleeping wrong. I don't know. And also sitting in a chair. I didn't know this 5 years ago, but seriously, sitting at a desk, sitting in a chair for 10 hours a day is really bad for you. So I try to get up like every hour, every 2 hours and just walk around and stretch out. But my neck really hurts today. So if I look kind of weird, it's because my neck really hurts. So I do apologize for that. Okay, let's see. Inspiring humanity. Hi, I'm just curious because I'm a bookkeeper for companies. What are the differences of doing rental bookkeeping against regular bookkeeping? Rental bookkeeping, so bookkeeping for rental properties, mostly just class tracking. Mostly just class tracking. You have income coming in from your rental properties. You've got expenses going out. You need to capitalize capital improvements. So that's a big difference dealing with assets and fixing and repairing rental properties. You need to capitalize anything. And then you also need a class track. So rental income coming in, expenses going out, interest payments, you need to class track them to allocate them to specific properties. So that's probably the biggest difference between rental bookkeeping and regular bookkeeping. Do you do accrual accounting in QuickBooks, Natasha? Sometimes, very rarely. A few of my clients have unearned revenue and prepaid expenses, but the majority of my clients are cash basis. Iris, what do you suggest I do to find tax filing professionals to partner with like you do? LinkedIn, just or Google, just like look up local CPAs and call them and say, hey, are you trying to get more clients? I've got a few people who need help with taxes. I'm looking for some more bookkeeping clients. Maybe we can grow together. There's two types of tax professionals out there. There's people who've been doing it for 30 years and are not trying to take on clients. And there's new people who have been doing it for a couple of years and are looking to take on clients. So for us, it probably makes sense for us to partner with somebody who's a little bit newer and might be looking on to take on more tax work. Jennifer, if charging by transaction, is there an easy way to track that number? So I only charge by transaction when I'm quoting somebody and it's only on an average monthly basis. So I don't change my monthly fee every month. So I just look at their 3 most recent months, add up all their transactions, find the average, and then multiply that by $3 or $4 per transaction to get their monthly bookkeeping fee. And I just do that by either getting their bank statements or looking at their bank feed in QuickBooks. Instant uplift channel, how to get the first work as a freelancer. That's a very vague question. I would recommend social media marketing. Also, I would recommend check out the video I posted yesterday. I just went live yesterday and I literally talked about exactly how I got my first bookkeeping client. DFOS, hi Zach, could you talk about how you price catch-ups? I price catch-ups the exact same way that I price regular bookkeeping. Minimum $2,000, minimum $3 per transaction. So if they have more than 600, more than 700 transactions for the entire year, I'll just add up all the transactions, multiply by 3, and that is the cost for doing their cleanup project. Can you talk a little bit about entering a journal entry and when you do this? So I don't typically, you only do a journal entry when there is a non-cash transaction like depreciation, prepaid expenses, unearned revenue, square fees, property purchases. So typically, if there are multiple lines, for the transaction, then you'll want to do a journal entry. But if there's just one line, like for example, that earnest money deposit, if you're just paying $5,000 earnest money deposit, you don't have to do a journal entry. You can just record that expense in the bank feed. You don't need to do a journal entry. But if it's a non-cash transaction or there's multiple lines on the transaction, then I will typically do a journal entry. Mike Melee, hi Zach, do you offer consultations to people trying to start their own bookkeeping business on your website? Yes, I do have one-on-one consultations. There is a link down below. You can schedule and you can sign up. I actually just had one yesterday, and that was my inspiration for today's video because somebody yesterday was asking me questions about this journal entries for real estate investors. And so I basically helped her with her specific situation. And so, yes, there is a link down below. You can schedule. I also have a course for sale. I've got a ton of digital downloads. They're all linked down below. The course teaches you everything you need to know from start to finish. And The digital downloads are available on my website. And then I go live every Tuesday, Wednesday, Thursday, Friday at 10 a.m. But I don't go live on Monday because I host a private group meeting on Monday at 3 p.m. And so that is also linked down below. If you want to join my private group meetings, you can do that down below. You can set up multiple businesses within your own QuickBooks account, correct? Not really sure what you mean by that, piece for all. So as a QuickBooks Online accountant, all of your clients will invite you to their books. So you can access all your clients' QuickBooks accounts from your QuickBooks account. But if I just have one QuickBooks account, I do not recommend having multiple businesses in one QuickBooks account. So like for me, like I have Zip Capital and I have Harrisburg Bookkeeping. I set up 2 separate QuickBooks accounts for each business. Mike Melee, I wanted to do specifically real estate accounting. Do you think it's better to work with flippers or landlords? Typically, a lot of people are both. A lot of people flip and hold properties. So I think you should work with both. I think you should work with both. It's very similar concept. You're going to be looking at HUDs. You're going to be class tracking. You're going to be looking at repairs and maintenance. It's very similar, Mike. So I would recommend doing both. Josh, good morning from Pittsburgh. I've had several people reply on Facebook expressing interest, but then they go silent. How hard do you pursue people like this? If somebody expresses interest in my bookkeeping services or investing in Zip Capital, I add them to my monthly tracker. It's just an Excel spreadsheet where I keep track of their name, the source of our communication, and the most recent date that we communicated. And I just follow up with them once a month. I only do this with people who first express interest in me. I don't do this if I message you first, but if you message me first, I'll add you to my tracker and I'll follow up every 30 days. Charles, after the property is sold, should I break out sub-accounts under COGS to show the different costs on the P&L? After the property is sold, so hopefully you saw my journal entry, but yes, I have 5 different cost of goods sold accounts. I have the house cost, the rehab cost, the holding cost, the finance cost, and the closing cost. I have all 5 of those under cost of goods sold. Carol Lee, pricing is hard. It doesn't have to be. You can just very simply $3 per transaction on average per month. Real quick coffee break. Claire, I don't know if you went over this previously. I just found this. How do you record the real estate manager statement? Record each transaction separately or one journal entry? So I assume you're talking about the owner's statement. So this is the bane of my existence, the owner's statement. So it's very difficult because typically there's reserves. The reserves is what makes it so complicated because the owner never gets the full money that they're owed. So in this example, let me just actually share my screen because that is a really great question. So typically, let me just add this to the stage here. Okay, hopefully you can see my screen. Okay, so you just asked about rental income from a property manager. Rental income, property manager. Okay, so rental income from a property manager. So the problem is, let's see, debit, credit. So the problem is, okay, so let's just say rent was, let's just keep it simple, $1,000. Okay, rent was $1,000. And then we have this management fee, and we'll call it $65. And then let's say we have utilities. I don't know why, but let's just say utilities. Let's just say $35. I did that wrong. Utilities, $35. Miscellaneous utilities, I don't know, just as an example. Utilities, $35. And then let's call it a cleaning fee. Let's say they charge you a cleaning fee for $100. And then, but the problem here is that you only got, let's say, checking account, you only received $750. And so it's confusing because if you don't do this journal entry, and it gets even more confusing when you have multiple properties. But if you have a property manager, so the rental income was $1,000, but you only received $750. So here's why it's confusing, because this makes sense, right? We have the management fee, we have the utilities, we have the cleaning fee, and this equals $950. So we have a $50 difference. So what I typically do from rental manager. So this is the reserve account. So the property manager typically holds a reserve account. just in case, I guess. So it looks like you only received $950, but in reality, you actually got the full 1,000, but the property manager is holding $50. So this is what the journal entry looks like for one property. So I have a client who has 40 properties being managed by a rental management company. So every single month, I get the owner statement and I have to do a journal entry that is this 6 times 40. It's like it's insane. It's over 100 pages. It's over 100 transactions long, and it's hard. It's confusing, but this is going to be your ticket right here, due from rental manager. And so this right here, this journal entry would match to the bank deposit, $750 going to the checking account, but you need to capture all this other stuff from the property manager. And this is all information that you don't know this information. You have to get this information from the property manager. It's called a statement. So ask your client if they have a property manager, ask them if you can get last month's owner's statement. Okay, where are we? Let's get back to the questions. Let's get back to the questions. I lost my spot. Let's see. Hi, just curious because I'm a bookkeeper, if charging per transaction. Let's see. Okay, Mike. Hey, Zach, do you offer, nope, sorry. Let me find my spot. I need somebody to manage these questions for me. Do you offer consultations? A bit more of a personal question. You've been hustling for 5 years and made good money. What is your plan to start winding down and enjoy life with family? So honestly, my plan is Zip Capital. So I have a ton of leverage by running Zip Capital. I can make a lot more money and work a lot less hours by managing Zip Capital as compared to running a bookkeeping business or an accounting firm. So Brett, just to answer your question, my plan is I'm not taking on new bookkeeping clients. I'm just going to slowly let my bookkeeping business fizzle and die slowly. I've got 75 clients. I imagine I'll lose 1, 2, 3, maybe 4 clients per month, and it'll just kind of slowly go away. So yeah, so my plan is to just continue to raise capital in my investment fund and manage Zip Capital. And also, to answer your question, you said, when are you going to slow down and enjoy life? I'm enjoying life right now. I really love working. So I try to prioritize family time as much as I can, early in the morning, in the evening, sometimes coaching my son's football team, going to church with the family on Sunday, spending time on the weekend. But I think it's totally fine to enjoy life now, even while you're grinding. You don't want to wait until you retire to just enjoy life. So I am absolutely enjoying life right now because I love working. I love growing my business. And I kind of had an existential crisis a year ago. I was like, what is the meaning of all of this? Why am I doing this? I was searching for some higher purpose. And honestly, I just kind of accepted the fact that I just genuinely enjoy working. And I think that's okay. I just genuinely enjoy growing my business, and that's why I do it, because I love doing it. So I think that's fine. So I'm enjoying life right now, but my goal is to grow Zip Capital in the future. Brandon, for real estate investing clients, best places to look and find them: Facebook groups. Real estate investors love Facebook groups, and that's where I found them. That's where you can find them. Peace for all. You can set up multiple businesses within your own QuickBooks account, correct? I think I already answered that question. Mike, I wanted to do specifically real estate accounting. Okay, so it looks like I missed a couple questions here. Let's see. Pricing is hard. I don't know. Let's see. Carol, if client just come to you this month in October, how do you charge them? Charge them as cleanup or calculate them as $3 per transaction and charge them the January? So, Carol, this is a great question. So whenever somebody comes to you asking for bookkeeping, I ask them, when do you want me to start? I don't like to tell people that I'll start. I don't tell people when I'm going to start. They tell me when they want me to start. I just remind them that if you want me to start in October, then that means I'm only going to start recording transactions that occurred in October. So if you want me to do bookkeeping January through September, you have to pay for that. But if you only want bookkeeping starting September 1st, then I will only do bookkeeping for transactions that occurred starting September 1st. but it's up to the client to tell me that. So I just ask them, when do you want me to start? So I don't ever tell. And the reason I don't tell clients when I'm going to start is because I don't want to say, hey, your books look good up until August, and I'll just start August 1st. Because then if there's a mistake in June or July, then the client's going to be like, hey, Zach, you told me my books looked good up through August. What's going on? I'd be like, oh my goodness, I didn't even do your bookkeeping. I'm sorry, I didn't know. I don't want to be responsible for that. So I'm not telling a client when I'm going to start. They tell me when I'm going to start. Nick Brown, hey, great job all around. You are a blessing to us all. You are appreciated. Thank you. Really appreciate it, Nick. Iris, what do you say to your clients when you want to view access to your client's bank account and to assist with their bookkeeping services? So view-only access is designed to make it easier for the client. So if they don't give me view-only access, they have to send me their bank statements every month. They have to send me check images every month. They have to tell me who they paid with their checks. It's easier for the client to give me view-only access because I can get all that information on my own. Jennifer, don't you need separate accounts for multiple companies if they each have their own TIN? Yes, absolutely. I think some people try to use location and class tracking to get away with having multiple companies in one QuickBooks account. I hate doing that. Yes, I think every separate company should have a separate QuickBooks account. This seems to be a really hot topic. Not sure why, but I definitely think that they should all be separate. Nick, have you ever had a social media influencer client? Nope, I never have. If the influencers are getting money from followers on a platform like TikTok, how would you handle that? So I get money from YouTube ad revenue and from Facebook. And so it just gets deposited into my bank account and it just gets recorded as income. Super, super simple. And then those platforms will likely give you a 1099 at the end of the year. So super simple. It's just income. Benjamin, what's the best QuickBooks program to start a bookkeeping business? And what level would you suggest? Thank you in advance. So you do not have to pay for your own QuickBooks account. You can go to Google, type in QuickBooks Online Accountant account, and you can actually get a QuickBooks account for free. You don't need to pay for your own QuickBooks account. And by doing that, by signing up for a QuickBooks Online Accountant account, then you can take the Pro Advisor exam and other people can invite you as an accountant. Jennifer, I see your numbering system for your accounts. How does that align with your whole chart of accounts? Usually numbers start with 1 if assets, 2 for liability, 3 for equity, 4 for income. So I just use those numbers those are the only numbers that I use. I don't actually use account numbers for any other chart of accounts. Those are the only numbers that I use because I type them in so frequently. I just know 201, 203, 204, 205. It's just easy for me to type in, but I don't use account numbers for any other chart of accounts. Jennifer, the thing that holds me back is having to pay for medical plans since I would be self-employed. Thoughts? Real quick coffee break. Jennifer, health insurance. I don't know anything about health insurance. It can be very expensive. Unfortunately, that is a huge burden for a lot of entrepreneurs. So a lot of people feel your pain, but unfortunately, Jennifer, I'm sorry, I don't have much advice for that. Junior Wing King. Hey, Zach, just got in here. Met with my first client yesterday. Good job, Junior Wing King. Proud of you. One question I have is, do you suggest booking journal entries or do you stick primarily to the bank feed? Always bank feed. I only do journal entries if I absolutely have to. I'm only doing journal entries if there's a non-cash transaction or if there's multiple lines for the transaction that need to be accounted for in a journal entry. Natasha, instead of letting the business fizzle, you could sell it, right? Yes. Natasha, I could sell it, but here's actually what I just thought about this morning. I like the idea of owning Harrisburg Bookkeeping. I would not necessarily want to sell it off and have a non-compete and have to get rid of my Google My Business profile, have to get rid of my website. I kind of like owning Harrisburg Bookkeeping. It's also kind of a nice backup plan. If my investment fund for some reason fails, crashes and burns, maybe the real estate market crashes and everybody pulls their money out, I kind of like the idea of having Harrisburg Bookkeeping as a backup plan. I don't know. Also, there's a couple clients that I really like servicing. There's a couple clients who pay me really well, so I don't mind making $5,000 or $10,000 per month and maybe just working with 10 or 20 clients. I could probably see myself continuing to do that. Maybe get rid of the clients who are just a huge pain in the butt and just keep it. And then if I ever wanted to take on more clients, I'm not going to sell it. I'm not going to hire employees. I'm not going to sell Harrisburg Bookkeeping. I'm just going to keep doing my thing. I have plenty of time right now. I'm not going anywhere. I'm not going to sell it. I could probably sell it for $400,000, but honestly, $400,000 in the grand scheme of things, really, it's not. I don't think it's worth it to me. I don't think it's worth it, especially if I can just keep it and just run it and just keep it as a backup plan. Keep it. I don't know. I don't know. That's like kind of a bad answer, but I'm all over the place. I don't know what I'm going to do. I'm just taking it one day at a time. Junior Wing King, like if they take out a loan for an asset or to record the adjustment to prepaid, yes, absolutely. Junior Wing King, adjusting prepaid expenses or getting the loan, those would all probably require a journal entry. Let's see, Charles, thanks for everything, Zach. How long did it take for you to feel like you had the expertise to handle bookkeeping for any client? Honestly, 2 years. Probably took me 2 years of full-time running my bookkeeping business to really feel confident that I could do 98% of the stuff. Let's see, Iris, when you start the bookkeeping, for example, in June, and you send the balance sheet and P&L and both are off and they didn't pay for that, what to do? Iris, honestly, I tell people, hey, like whatever happened in May, I wasn't your bookkeeper. You didn't pay me to do your bookkeeping. I don't know what happened in May. I'm just doing your bookkeeping from June. So really, that's not my problem. I say it in a more polite way, but if you want to pay me to do your bookkeeping in May, absolutely. I will go back and I will go through each and every single transaction individually, make sure everything's reconciled, make sure everything's accounted for. But if you didn't pay me to do your bookkeeping January through May, I don't know what happened and I didn't look at it. And I'm not going to unless you want me to, unless you pay me. It's really simple. It's really straightforward. It doesn't have to be complicated. It really does not have to be complicated. The only time it gets complicated is when emotions start to play a factor and you start to do favors. Doing favors, getting emotional, not communicating clearly up front, that's when things get complicated. But if you just say, hey, listen, you didn't pay me for May, I don't know what happened, not my problem. Obviously, like I said, say it more politely, but that's the truth. And so just communicate clearly up front, and it's really pretty simple. Thank you for your help in all of your videos. I'm about to start my journey bookkeeping, and you've been a great help. Benjamin, appreciate you. Hey, Benjamin, if you want, definitely recommend check out my private group meetings on Monday. There's a lot of other bookkeepers just like you who are just getting started, and we have a private group meeting. Super, super helpful. Accountability, support group. Also, I've got a course for sale. So check out the course in the description of this video. The course will give you the confidence you need to start your bookkeeping business. Carol, do you analyze their previous QuickBooks when client comes to you? Do you analyze the QuickBooks? Let's say their books is a mess. Does that charge change exchange? Does that charge exchange instead of that $300 monthly fee? Nope. I just strictly do it off of number of transactions. Number of transactions. That's it. Because that's what our job is. Our job is to record transactions. So the number of transactions that you have is what's going to affect the price and the amount of time that I have to spend. Natasha, good answer. Don't sell. See you on your next live. Hey, I'm going live every Tuesday, Wednesday, Thursday, Friday, 10 a.m., same time, same place. Let me know what you want me to talk about tomorrow. I'm doing these for you. So keep asking questions, keep showing up. Junior Wing King, do you do sales tax as a service to your clients? No. I don't like sales tax. I don't do it. That would be outside the bank feed. I guess I'm having a hard time understanding what outside the bank feed work I should do. Junior Wing King, you don't have to do anything you don't want to do. I create financial reports. I create your P&L. So I record your transactions, reconcile your accounts, and generate your financial reports. That's all I do. That's all I've ever done. I don't do sales tax. Just dump everything off on the tax accountant. Say, hey, payroll, sales tax, tax filing, payroll tax, let your CPA do that. I will do your bookkeeping. Very different job. Taxes and bookkeeping, very different job. Charles, has there ever been an instance where some bookkeeping work you did had to be redone by a CPA or the CPA said it wasn't done correctly for the client's taxes? Not really. But here's the thing. If there ever is an issue, I cooperate with the client. I cooperate with the CPA. We are all here to work together. We're not working against each other. We all have a common goal: accurate financial reports, timely tax filing. That's the goal for everybody. So I never take things personally. I don't let the CPA belittle me or talk down to me, but I try to cooperate with the CPA. I don't try to play hardball. I don't try to get one up on the CPA and prove that I'm better than the CPA. We are working together. So I try to keep things polite, positive, professional. We are working together. I will do my best to accommodate whatever the client wants, whatever the CPA wants, as long as it falls within my scope of work, as long as it doesn't cross any boundaries. Let's see. Iris, thanks for the suggestion. Absolutely. Carol, thank you, Zach. You are always helpful and positive. I appreciate you, Carol. Thanks for your support. Junior Winking, the problem with letting the CPA do the work is my client's goal in hiring me is they expect a lot of the CPA's work to transfer to me. If I can't take over some of the work, I'm afraid he'll drop me. So Junior Winking, that is a very common fear, and that is what happened. That's how scope creep happens. That's how boundaries are crossed because you are not confident and firm in your offer. You need to be confident and firm that you are offering a very legit service. You are just doing bookkeeping. You are not taking over the role of an office manager, a controller, a CPA, a tax accountant, a CFO. You are not doing that. You are not doing that. You are just doing bookkeeping. You need to be confident in your offer. Don't try to do more than just categorize transactions, reconcile accounts, and generate financial reports. Brian would love to see a topic on the reconciliation process and not just bank or credit card accounts, but others as well. Brian, that's a great topic. I will definitely do reconciliations in the future. Not that my client is a bad guy, Junior Winking. I'm just afraid if I tell him I'm going to just categorize transactions and produce reports, he might not see the value in that. He's a small client, less than 50 transactions a month. Charge him $200 a month for listen, I have clients who have very small companies, like they have less than 50 transactions per month, and I charge them $200 per month. Sales is all just a numbers game. So you just need to get more experience. You need to get more clients. Don't worry too much about this one client. Do a good job. Do what you say you're going to do. Focus on marketing and sales. Focus all this fear and energy and anxiety on getting more clients, getting new clients. Don't worry so much about this guy. It sounds like you're stressing out a lot about this one client. He's a very small fish. Charge him $200. Do a good job, categorize his transactions, reconcile his accounts, send him his P&L on a monthly basis. If he's not happy with your service, then it's not a good fit. Not every client is going to be a good fit. He might fire you. You might fire him. That's just the nature of business. But you cannot sacrifice your company values, your company, your services and your scope of work. You can't sacrifice that for every single client because there's always going to be clients who want to take advantage of you. Don't let them take advantage of you. Iris, how did you get real estate investors? They seem to be unresponsive on LinkedIn and Facebook. Consistency. Follow up, follow up, follow up. Continue to create content. Continue to connect with them. It's all about consistency. It's not going to happen on the first day. It might not happen on the 60th day, but 6 months, 12 months, eventually you will get there. Charles, thank you for everything, Zach. These opportunities to ask you questions has been super helpful and encouraging. Absolutely, Charles. Absolutely, Junior Wing King, Iris, Charles, Carol. Thank you all for your questions. Thank you all for your support. I'm going to hop off now. Register on my website if you want to join Zip Capital. If you want to join my investment fund, I'm offering 8% up to 12% fixed returns. You got to be a U.S. citizen. You got to be an accredited investor. Register on my website if you want to learn more, and check out all the other links in the description of this video. I will see you all tomorrow, same time, same place, 10 a.m. Thank you so much.